Good morning, ladies and gentlemen. This is Butch Shorak, Options University, Friday, August 31st, 2012. Access to this video is for educational and informational purposes only. Nothing contained in this video, website, or promotional material constitutes a promotion, recommendation, solicitation, or offer of any particular investment, security, or transaction. Options University provides educational services that are meant to teach you the risks and rewards of trading stocks and options, and we are not a service that tells you what to trade. We are not implying or guaranteeing any profit, and as always, do not trade with money that you cannot afford to lose. Please take the time to look at this entire page and read it in its entirety. With that thought, let's take a look at the SPX for the first 4 days of the last week in August, and we see that we are continuing up in an uptrend. As we continue up in that uptrend, we have entered a down cycle in that uptrend. And so if we look at the last 4 days, you'll see that we are getting lower highs and lower lows as we continue in a down cycle in an upward trend. Notice that we have the 30-day moving average sitting right below us at about 1392, and notice that we have been traveling up since early May, and we've been traveling up in this very defined pattern, getting higher highs and higher lows. The month of August certainly gave us a nice rise in the market, albeit on very low volume. Now let's take a look at our chart that gives us a 1 month view, and we'll look at these last 4 days. We get a little bit of close up, and we see that we had a big up day on Friday. We popped up to that area of resistance at 1417 on Monday, and from that point on we had very difficult time going higher, and then finally it kind of threw in the book today on Thursday, and we see that we broke through that previous low on Friday, and what we're looking at is probably further movement down to this 30-day moving average, as that market seems to be pulling back to some level of support, potentially around 1388. We do have news coming out tomorrow. The economic news for the week was not very outstanding or very strong. Had issues coming out of Europe and Asia. It sounds like the whole summer when I talk about these things. And on Friday we have the G7 taking place in Jackson Hole. Expect Bernanke to speak, and there's been quite a buzz about that information that he's going to come out with in Jackson Hole. So we'll see what happens tomorrow. Watch that first hour to help you determine on direction of the market as we close the week and the month of August, and take a look at September, which traditionally is one of our weakest months of the year. And we also have coming up a 4-day trading week next week as we go into the holiday on Monday, when the market will not be open. With that, let's take a look at the Dow and see what the Dow did during the same period. Looking at the last 4 days, we see we are in a down cycle, continuing with the Dow, where it was a little bit weaker than what we saw in the S&P. Actually dropped below the 30-day moving average on Thursday, and we very well could be headed below that magic 13,000 level. We'll see if that acts as support. Again, watch the beginning of the market tomorrow and give an idea of where the opening high, opening low is for your time span of interest to help you determine the direction for that Friday market going into that 3-day weekend. NASDAQ showed a little better strength and was hanging up there pretty good until finally throwing in the towel. But notice it did not get as low as that low on Friday. So NASDAQ showing a little bit more relative strength than the other two indices. Looking at the Russell 2000, it showed a lot of strength, kept hanging in there, went up and traded to the top of that trading range that the Russell's been in for a while, and then on Thursday gave it up and had a big down day as the Russell decided it was time for it to pull back. We'll see how far it pulls back. It's nowhere near that low that we had on Friday. So a little bit of strength, a little bit of weakness, differences in our indexes as we look at the different levels. Russell in the month of September has been known to have positive numbers, whereas it's about the only one that over the last 15 years really shows us any kind of gains in the month of September. Next, let's take a look at the VIX, and we see, fear coming into the market, and we see that we have shot up about from 13. We're up about 4.5 points in the VIX as we see the fear coming in further and further as we head into the month of September, giving us a bit more volatility and therefore a bit more premiums for us to work at. For those of you that are option sellers and living off of theta, that certainly provides some added opportunities for you. Let's take a look at some of the sectors that we had during the last week and see how they performed in our down cycling market. All right, we see the bonds. Bonds did pop up a little bit as the market was pulling back. No big surprise. Looking at TLT, which is our ETF for the bonds, giving us some kind of concept that that's kind of finding and following normal levels. Notice the very, very low volume in the bonds as we don't see any big action taking place there during the last 4 days. Next, let's take a look at our next ETF, and that is the XLF in the financials, which generally will follow the overall market, and we do see this continuation of the down cycle on the financials, and we'll see where they head as we may be at some kind of level when we get to the 30-day moving average on the S&P. Already reached there on the Dow, so we'll see if financials decide to pop, showing a little bit of relative strength to the other two indices. Next, we're going to look at USO, our exchange-traded fund for oil, and we see that it is pulling back with the overall market and pulled back much lower now than where it opened on Monday. Also lower than where it was as we closed the week on last Friday. So oil showing a little bit of weakness headed for that 30-day moving average. And finally, there's been gold in the air as far as news, talking about using it as a legal currency in the United States. We're going to take a look at GLD, our ETF for gold, and we see that while the market is showing a little bit of fear, gold is pulling back a little bit. Where is that safe haven? But we did have quite a move in gold during the month of August, so we're pulling back to that 200-day moving average. It'll be interesting to see how that will all fit as we look at gold, trying to determine whether it wants to run or not as a safe haven. And finally, we're going to take a look at the ETF, the Spider, and we're going to look at the Spider to see what kind of volume we're having in this uptrend with a bit of a sideways move here, with the last 4 days being a downward cycle in this uptrend. And we see volume for the entire month has been extremely low as we've been climbing higher, and in a election year that is not unusual for us to see August be strong. I was a little surprised, did not fully expect that, but nonetheless August did take off and we did break out of that previous trading range. We'll see if we head back to that trading range. Some talk in September that we could have quite a pullback, and so be aware of the bullish side of the market as we pull into September, which generally sets up the fourth quarter, which is usually the strongest quarter of the year. So for those of you that are gold members, stick around. We'll talk about our stocks to watch. And for the rest of you, thank you for being here. This is Butch Shorak, Options University. It's Friday, August 31st, 2012. This is Market Recap. 1 day to go in the week, and then a 3-day weekend. Please enjoy. Thank you. And to our gold members, welcome back, and let's take a look at the SPX. We see that we have plenty of support positions below us where we've had volume before, certainly positions of support above us. So we've got areas of resistance at 14.15, basically are about 14.17 where we've gone before, and then above that 14.31, 14.40. Looks like we're setting up for a pullback in the market as we go into September, but you know, this market can do funny things, and we could get a bounce up and retry some of those highs before we do that. That isn't my thought as to what's going to happen, but remember, you need to react to what the market's doing, looking for these lower lows and lower highs, or the opposite with higher lows and higher highs, and certainly be willing to adjust your trades, because when it really comes down to your trading account, what counts is your money management and how you handle a trade when it goes against you. You can put probability on your side and be profitable in a whole lot of trades, but if you let that one bad trade go against you and really nail you, it takes away all your wins. So remember, money management is the key, and as we look at our forecast, we see that we are in an uptrend, and we certainly do expect in September that we are going to retest some of these lows. There are those of people that will say that we may come very well down and retest these May lows all the way down to 1278, which would be quite a pullback in the overall market, and the VIX is beginning to show us that kind of fear beginning to develop. But it doesn't mean anything to say that you think it's coming. Your job is to react to what does happen. So watch your technical analysis. It'll give you an indication of what is going on in the market, and read your charts and be willing to either take your stops or be able to adjust your trades if you know how to adjust your trades, and do what successful traders do, and that is successful money management. With that, let's take a look at some of our stocks, and we see Amazon certainly has showed us great relative strength, which we've been talking about this stock for some time. We are in a breakout. We basically have reached about an equal move. This move went from 215 all the way up to 240. That's about a 25-point move. This breakout took off from basically right around 235 up to about 250, so far we're at about 15-point move, and Amazon could move a little bit further to get an equal move, but we've seen quite a move out of Amazon, and during the last week showing great relative strength of the overall market as it continued to head up. Does look a bit like a reversal pattern there, but remember, that means nothing until you get confirmation with a lower low, and so watch for that into Friday, into next week, as we see Amazon may be due for a bit of a pullback if the overall market does. Otherwise, the trend is up, and it stays up until it changes. All right, let's next take a look at Apple. The mighty Apple certainly has had some moves, had a great lawsuit decision out of Samsung, and so we see that it did have a bit of a gap up going into the beginning of the week and kind of reached its saturation levels, pulled back a little bit, and we've just about closed that gap that we had at the beginning of the week, and a little bit of weakness of Apple. But you know, if you've bought weakness in Apple, you certainly haven't gone wrong for the last 4 or 5 years. So certainly Apple, a bit of a pullback, but these pullbacks just tend to keep getting bought and bought and bought. How far back will it pull back? Well, our original support is back there at about, well, between 600 and 625. Don't expect that much of a pullback out of Apple. But if we have a big pullback in the market, it certainly is one. It is capable of pulling back. All right, so far did not show great relative strength. The overall market did have a nice gap up on news, went a little too far too fast, and showing the results on Apple. Next, taking a look at AutoZone, we see that AutoZone is following the overall market, dropped below that 200-day moving average. Remember, we talked about this. If this drops below the 200-day moving average, the next area target that it's headed for is right down there at about 353, 354. So AutoZone gave us an entry breaking that 200-day moving average, and we see that this has not been the stock that it was earlier in the year. Next, taking a look at CMG, gave us a very similar picture in that it couldn't break through that diagonal line that I had drawn, and today on Thursday we got a lower high and a lower low, which gave us an entry on CMG. Target for this is that previous low right back there at the beginning of August, and don't be a bit surprised if we get there rather quickly if the overall market pulls back. CMG has been punished, and it will take a while to rebuild the momentum that this stock once had. Next, we're going to take a look at Google, and boy, look at that Google go. Just only really knows one direction. So we see that Google is climbing, so is the moving average. This thing has been headed back up for the last 6 weeks, and certainly showing great relative strength the overall market. Barely phased it this week as the market was pulling back. This thing was shooting up and leading the market with new highs. Alright, next let's take a look at Green Mountain Coffee. We see that it started to pull back, gave you that entry today with a lower high, lower low, and so where we headed for at least that moving average, maybe a little bit lower. A stock that hasn't gone very far, but certainly they were happy with earnings as it did pop up and showed about a 10% increase, not anywhere near the kind of loftiness this stock used to have. Now let's take a look at one of our medical stocks that we keep an eye on. All these are pretty much traded and have weekly options on them. Let's look at ISRG, and we see that it is in a down cycle, and it is pulled back below that 200-day moving average. So those of you that took advantage of the breaking of the 200-day moving average, you're seeing this thing keep right on moving, headed for that low of that previous line that we've got drawn there, which will give it a single bottom, double bottom, and a potential triple bottom, and we'll see if it even breaks below that, as there's been some slowdown in this healthcare stock. Next, let's take a look at a stock that also ran all last year, and that was MasterCard. These stocks are poised to pull back so that they can have a nice run potentially in this fourth quarter of this year. We see MasterCard going relatively nowhere. We've talked about potential condors on MasterCard, and it really hasn't shown any reason not to continue to do that. Pulling premium out, you can do it on weeklies, you can do it on monthlies, certainly giving you some opportunity for taking advantage of theta. McDonald's falls into exactly that same kind of pattern where it's been trading somewhere between 90 and basically about 86.50, and it's been trading there for the entire month and then even part of July. So another stock for a strategy that you like, utilizing options for a stock that goes absolutely nowhere. All right, next let's take a look at Nike, who that just isn't doing it. Did have a bit of a pop this week, but we see that pulling back with the overall market and still sitting underneath that 200-day moving average. If the market goes up, this thing could go up to that 200-day moving average, but then look for a pullback out of Nike, as it's not doing what it did all last year. It's just not doing it. Next, let's take a look at Priceline. Sitting up there, Priceline got severely punished, 100 and some odd points with the last earnings announcement. Finally crawling back up. It's crawled back up about 40, 45 points. It's hitting that 200-day moving average today. And if the market pulls back, you can watch this potentially head back down and head for some of those previous lows, basically right around 560. So potential move on Priceline to the downside. Watch for lower highs and lower lows with the market pulling back in that same direction. And then finally we have that staple company, W.W. Grainger, Rebuilding America. Pulled a little bit below that 30-day moving average, pulled back with the overall market, but certainly in a nice uptrend. And what were earnings? not the same company that it was before earnings, as we see a lot of interest and certainly not great volume in W.W. Grainger as we went through this month of August, but certainly good relative strength to the overall market. So those are our stocks to watch, and we're ready for a nice 3-day holiday. And with that, this is Butch Chorak, Options University, Friday, August 31st, 2012. Thank you.